Good evening, everybody. It's Scott Gillum with the ShadowTrader short video. Today, let's look at the QQQs. We've had quite a rollover on the high back there in August. Now, just to give you some context, NVIDIA topped out on the 12th of August, Apple on the 14th, Microsoft on the 12th for a second top, Amazon around the 14th, Alphabet the 15th, Meta the 12th, Netflix topped out a little bit later on the 18th, Tesla on the 13th. So we've got this prominent rollover here with the Qs, and now breaking a trend line that starts from the breakout, then the retracement, back there from May. And as you can see, we are right on that lower trend line at this point in time. If I draw a parallel line to that upward trend line and just capture all of these tops, well, that puts us to a point that's around 605, 606. The other thing that I did to analyze these Qs is to go back to the April low, then go to the next inflection point, and then the next, then the next, then the top, or take from the top to the bottom, and divide these equally. We've got about 45 points of each iteration that this QQQ has gone through. So if I take today's current price and I take that 45-point move, that puts us up at 609. How can we play this? I want to be less wrong than just being right. So if I'm wrong and we make this reversal and come back up, well, I want to be able to use an adjustment to make that wrong into a right. So as you can see, we're around that 50 simple moving average, below the 21, below the 8, and they're trending down. So how can I take advantage of this downtrend that is continually going, but on any reversal be not underwater to a point where it's going to hurt my portfolio? Here's where I'm looking at doing what's called a bear call, or taking something that could just bite me in the rear end and making it into something probable. So if I take a look at where we sit with this chart, if I take a look at a 580 short call, cap that off with a $500 risk, or 585, I can pick up someplace around this $1 level, and I was seeing this at $1 earlier. So if I have a $1 credit in my portfolio on $5 worth of risk, I have in essence only $400 that's at risk. Well, 1 on 4 is a 25% return in the time frame that I'm looking at. That's a very viable trade, and we're talking 15 days. Now, if it continues to go down, all the better. I don't care, as long as we don't get to around that 580 level. What happens if we go to 580 on the plus side? Well, here's where my poor trade in the direction becomes a very profitable trade for me on a reversal back to the upside. If we go from this 563 level and we move up, 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 up to 580, at this price, I will buy 100 shares. In essence, I now have stock at 580, or the ETF, plus this short call that gives me a covered call. Yes, I'm not going to make a lot of money on it because I'm buying at 580, selling to 580, but I still get to keep what I originally had for the 190 on the strike. I mean the 190 on the credit. All right, that leaves me with covered call and a long stop. If the Qs start to move up by about these 18, 20 points, this 585 cost at 101 is going to ratchet up in value, less any of the time decay that we've had. So if I can get anything more than the 101 price, I now have a covered call that's profitable, and I have a long call that's profitable. That's if my bear call goes awry and we go back to being to the point where this QQQ has gone back above the 580 level. What can make this happen? Well, we've got a lot of pending events coming up. On Friday, tomorrow, we've got Jackson Hole. That should not be such a big market mover to the upside, in my opinion. It should be more of a moderation, if not a downward trend, in the price of the tech side. Okay, on the upside, we've got NVIDIA. NVIDIA comes up with their earnings on the 27th. All right, so I've got risk out to the 12th with an NVIDIA move on earnings. Now, NVIDIA right now, from their peak that they had back on the 12th, they're down about 5%. So if they move back up that 5% loss, all right, things are back to the point where I've got to buy shares on this bear call and make it into a covered call. What else have we got going on? We've got the economic report, the PCE, which is the Fed's favorite report. That comes out on the 29th, still before the expiration of this trade. Apple has about a 5% drop on their peak to where they sit right now. They've got an event coming up on the 9th of September. And typically Apple is a pop and flop on that iPhone event. So that shouldn't help or hurt in any way, shape, or form to where we sit now. So we've got a pop put on the upside possible for NVIDIA with a rollover on Apple, a down play on the PCE number, and then this trade will be over and done with before the Fed rate hike in September comes to fruition. So there you have it. QQQs on the way down. I want to sell credit up here at 580, cap that off with a $5 risk at 585. If I'm wrong and we do a reversal and come back up to that 580 strike, I'm going to buy shares, turn that into a covered call, and then let this long call make me money on the upside. There you go. Thank you very much. Have a great rest of your day. Bye-bye for now.
Hi there, this is Scott Gello from the Stock and Options Room of Live Trading Suite. If you enjoyed this video, please hit the like and subscribe buttons down below. And if you'd like to trade live with me in real time, click again that link in the description below. Good trading to you all, and I'll see you in the room.